Hello, this is Dave, and welcome to Equity Story. I hope you're all well and not getting obviously too depressed with the markets, but fear not. This is what we said is going to happen, and it is obviously happening. So where next? So as you can see, here's the XJO. We're starting to sell off. Things are starting to look a little bit ugly. Yes, we could have maybe a bounce I think maybe 1 week, maybe second half of this week, maybe even next week. We could have a little bounce, but we're going lower, and we're going possibly quite a bit lower. So hold your cash and just be patient. And just like we've been saying on Einstein's and on all the videos, this is what we're expecting, and it's happening. So just having a look here, I mean, if you look at the NASDAQ, starting to go down towards that sort of 11,267 level. Again, the Dow breaking support. I think it's on the way down to that sort of 3,000, and our sort of XJO again, I think on the way to that 6,650. Now, everyone's sort of feeling, oh my gosh, you know, this market's capitulating, it's falling obviously a lot lower. I'm going to buy the dip. It's just a wrong thing to do, because if you look at the average P ratios of the sort of ASX 200, what you tend to find when you get really rocky periods in, you know, the GFC, and you get sort of the 87, these P ratios can, again, just in panic, maybe come down to an average around between 10 and 12%. So if you look on historical data, this is a really good possibility where the world is going at the moment, with all the uncertainty, with inflation, all the issues. Our P ratios and what we're looking at, we sort of want to value our market at, could go down a lot more, and we could easily be trading back down here at around 6,000 easily. And would that surprise me? Not at all. So this is a sort of market where it's very, very, very difficult to obviously trade, but it is going to be the market, like we said on Einstein's, hold your cash and just be patient, because the deals will come. The sort of stories that we want to buy will come. However, there are things maybe worth having a look at if it suits your plan of what you're trying to do with your life. And certainly at the moment, I think the banks are holding up. NAB paid their dividend today. I think the banks are generally holding up pretty well. So, okay, if you're going to have to lock your money away for 6 months, or maybe even sort of 8 months, whatever, and you can't survive off 2% in the bank, well, the banks are giving a pretty good dividend. We do know there's very little growth in some of these banks. I mean, they're trading where they were 15 years ago, but fine, you know, you've got your 4 or 5% dividend on these stories, and possibly, you know, worth having a look at as a sort of safe environment to put your money in these difficult times. So again, what you've got Westpac, ANZ, and you've got NAB in that list, and of course you've got CBA. So we'll have a look at CBA. How are they're doing? And yeah, CBA coming down to trend, but I think the others are better for a dividend. I think you get a slightly better dividend in the other banks than CBA, although arguably, obviously, with CBA maybe a little bit more quality. Again, I still think that the oil sector, if you take that long-term sort of view, is a place to be. And you can have a look at things like fuel. It's a little ETF, has a good array of all the fuel stocks around the world. They're having a little bit of a sell-off, maybe an opportunity, so you could have a look at that one. I think Woodside is still okay if you're in that trend, hold it. You know, I think it's got a stop loss just under 30. I think you'll see oil bounce back quite nicely. Worley, unfortunately with Worley, we put it on a daily now. If it's below, if it's where it is obviously trading now by the end of close today, sell it, get out. Again, protect your money. Rule number one. Two stories that you might be interested in having a look at, which we don't often go to, but certainly in this environment, worth having a look, is obviously the BBUS, which is ETF, which basically shorts the market. So if the markets go down, these go up. So again, quite a nice hedge if you've got one, but they're starting to break up. So you can start seeing that the momentum coming in. So BBUS, which is obviously America, and you got BBOZ, which is Australia, just starting to poke its little head up now. They could be quite interesting, certainly to have a look at. If this market keeps going down, well, the BBOZ could rebound quite nicely, and so could the BBUS. So maybe two stories worth having a look at, and hopefully it could be quite lucrative, possibly with what we foresee coming over the next 3 or 4 weeks. Announcements today, we had JYC. Now, this is a dividend play, which we did suggest getting out of when it broke trend. If someone's still in there, I thought the announcement was okay. It was a little bit contrary. There was warning about sort of supply constraints and all the issues COVID has caused. And then it said afterwards, well, guess what? We're okay. This isn't affecting us. So I was quite confused actually reading it. Mr. Wolf did call me. He's in the jungle, and I was having a laugh with him at JYC, and he agreed. But at the moment, I think you just got to stay away from it, even though they're saying it's okay and that the story's holding up. It's hard to read into that announcement, really. CRN announced a nice little, I think, an extra little dividend. I mean, it's holding up quite well. I had a little bit of selling with the market, but I think if I was in that, I'd still be holding it at the moment. It doesn't look too bad. EOS came out with announcements. It's quite interesting. So they've got a little laser-guided gun which shoots those little drones out of the sky, which is obviously, it's very, very interesting. And it's the way warfare has changed. I mean, drones are like the new thing. I mean, the Russians have been marching into Ukraine with their 1,000 attacks, and little drones have been taking them out. So drone warfare, hello, welcome. It's changing the world. And they've got like a little laser gun that shoots these drones out. Now, listen, it's too soon yet. So I wouldn't be buying it yet. But get on your watch list, because see if they can get some good contracts. And in the past, we've had a great run with this stock and made a lot of money with it. But a little bit too soon yet. But like I said, get it on your watch list and see if they get some good contracts. The big story today was Pendle, PDL. They outperformed the market, and again they're up 9%. But are we going to buy them? Nah. It's just way too risky, below trend, and certainly just not interested at the moment. I think really that's all we've got to talk about, because there's not really much to buy at the moment. There's just a few ideas. Like I said, the banks are holding up reasonably well in this environment. I think your oil stocks will do well. Gold is more or less holding up. So as long as the gold stocks are holding above trend, I'd be holding them. I think be careful the iron ore. Iron ore came off overnight. So I was having a look at Fortescue. I didn't like it. FMG. Just starting to break below trend. A little bit of a worry, I don't like that. So if I was in FMG, if I was in it for the dividend, maybe I'm holding it. But if I was in it for some more than that, for a trade or trying to get some growth, I might be just getting out of it at the moment. I think, what this could be, there's just a feeling at the moment, and the feeling is cash is king. And I don't know if many of you remember the 2000, and a lot of you are younger than me, but it's amazing how when the world gets economies get tougher and cash becomes more and more important, the buying power of cash becomes stronger and stronger. So cash is king, and possibly at the moment, certainly for the next 6-7 months, it's most probably the best. Although it's not giving you much return on your money on cash, it's most probably going to be the most, say, strongest performing asset, because your buying power in 6 months with the money you've got today could be worth a lot more in 6 months. So cash is king, and hopefully you've got some cash, and we just got to be patient. We just got to wait for these bargains, and we've got to wait for these opportunities, and they will come. So don't worry. Now tonight we've got Ask the Analyst Live, and it's going to be a very special Ask the Analyst Live, because I've got Claude Walker coming in. And you might say, who's Claude Walker? Now, Claude Walker is most probably one of the best analysts in Australia. He made his name with Motley Fool. He was the one with Hidden Gems that really picked some amazing hidden gems for them. So he's come on Ask the Analyst tonight, and he's going to talk about some stocks that he likes. Now, they're not buys at the moment, but he wants you to get them on the watch list. And we can ask him some questions on those stocks. And of course, then I'll look at some trades and some trends and see. And if Claude knows anything about those stories, he'll obviously have a comment about them. So I'm really looking forward to Ask the Analyst Live tonight. It's going to be a lot of fun. It's going to be great to have obviously Claude with us. He's a young, enthusiastic guy. He's unbelievably knowledge on tech stocks and really good on the actually on the internet and these type of stories, and just a wonderful guy. So look forward tonight at 7 o'clock, and hopefully you won't all be too drunk by then. All right. Thank you very much. Bye bye.